Hi, hello, good morning to all, and happy Friday. Welcome to today's daily dose of market insights. Well, finally, we reached to the last month of the year. So today is Friday, the 1st of December. Good morning. So before we start our daily dose of market insights, I'm Kelvin Wong here, the senior market analyst of OANDA Asia Pacific. Let's take a look at the disclaimer slides first. All right, leverage trading carries a high degree of risk and may not be suitable for everyone. Losses can exit deposits. This presentation is not an offer or solicitation to buy or sell, nor financial advice or recommendation for any investment product, and as well as any forecast, prediction, or projection in this presentation is not necessarily indicative of the future or likely performance of the product. This advertisement has not been reviewed by the Monetary Authority of Singapore. All right, so now, as usual, let us kickstart with what happened overnight during the European session and the US session, and also to highlight what are the key data to look out for today, and as well as the short-term technical outlook on the various broad-based asset classes ranging from FX, stock indices, and to commodities market, which is oil and gold. So now let's start with what happened overnight over here is, let's start with OPEC Plus first. So over here at OPEC Plus over here is that pretty interesting over here is that oil price actually gained close to 1%. The WTI crude oil in our platform, the West Texas oil, clear above the 200-day moving average at $78.10. But however, it actually plunges thereafter during the US session after the finalized announcement of this OPEC Plus meeting. So if you could look at my screen over here, is that one of the reasons why they actually plunged because of, yes, even though OPEC members desire to make an extra 1 billion barrels a day of cut extending into 2024, in the first half of 2024, but however, the key curbs right now over here is that these cuts are largely voluntary. That means, i.e., there could be several members, especially from the African nation, that initially rebel against such cuts, may define this output quota set by OPEC Plus. All right, so that actually kind of a dissipated the earlier bullish sentiment on WTI crude oil. So it faces the kind of what I call buy the rumor, sell the news outcome. We call it a scenario. So later we'll take a look at the WTI crude oil price, the West Texas oil short-term technical outlook. Okay, another key we call it news flow. The highlight is Fed speak. So over at Fed speak over here is that two key Federal Reserve officials made a public statement yesterday, sharing their view on the state of the US economy and most importantly the trajectory of future Fed fund rate. All right, so as you all know, that market right now is heavily pricing in a Fed pivot. That means, i.e., we will start to see the terminal rate of the Fed fund rate at 5.25% and 5.5%. That means there's very, very low odds of less than 10% of another hike coming into 2023 and even into 2024. So right now, market has been heavily pricing a dovish Fed to ignite its first rate cut as soon as March this year. All right. So this New York Fed Chief Williams has said that yes, policy is most restrictive in 25 years, but however, he stated that over here, I expect to be appropriate to maintain a restrictive stand for quite some time to fully restore balance and to bring inflation back to our 2% long run goal. So based on his view over here is that he's more inclined towards keeping rates at this higher level for a period of time before deciding on even to cut rates as soon as March next year. That's being priced by the futures market as indicated by the CME Fed Watch 2. So similar over here is that for Fed Dowdy, she said that rates are in a very good place, not considering cuts. So this Fed official is one of the much more vocal hawks instead. But overall, if you look at based on these two Federal Reserve rather not so dovish speech, if you look at the CME Fed Watch 2, market are still very, very dovish in terms of Fed expectation heading into next year, and as well as the last meeting in 13th of December, which is only 2 weeks from now. So very low odds of a cut, of a hike, pardon me, only 3.2 odds chance to bring the Fed fund rates to 5.5 to 5.75. So this is the current Fed fund rates. So if you look at the accumulated probability across the board, less than 10% or less than 5% chance of any hike coming into next year's meeting. And in fact, over here is that there's now a 50% chance, a big increase. I think at the start of this week it's only 30%. So right now it jumped to 50% that the first cut will come as soon as March next year. Okay, so that's pretty dovish instead. Okay, so that actually potentially could continue to drive this medium-term dollar weakness, which is also could actually spill over to risk-on behavior, especially in the US benchmark stock indices and also the rest of the world, but excluding China, unfortunately, due to its own circumstances. All right, so now, and which is Hong Kong proxy as well. Okay, now other key economic indicator to highlight will be the inflation data out from Eurozone at 6 p.m. yesterday, Singapore time. Okay, Eurozone flash rate, actually the core flash rate actually came down softer than expected, 3.9%, market expecting 3.9%, and it came in at 3.6% year on year. So if you look at the trend of inflation in Eurozone has also continued to tick down much lower. So in fact, yesterday's level was actually the lowest since April 2022. Okay, 2022. All right, so that actually also sees a bit of easing or deceleration of inflationary pressure in Eurozone. So that actually see the euro actually underperform against the major currency yesterday and broke below our short-term pivotal support at 1.09 because of this rather softer than expected Eurozone inflation data. So now what's next for other data to highlight over here will be this calendar again. Okay, the release of yesterday Core PCE data. So Core PCE data, why is it important? Because that is the Fed preferred gauge of inflationary pressure in US. So if you look at over here is Thursday, you zoom down again. Okay, over here. Okay, so the Core PCE price index year on year, it came within expectation, 3.5%, and 3.5%. Okay, so 3.5%, 3.5%. Also 2 basis points below September number of 3.7% year on year. So if you look at the trend over here, it's also been inching downwards as well. Okay, a slow inching downwards. All right, so that actually came in as low as April 2021. So it's the lowest year on year increase since April 2021. All right, in line with market expectation. So that actually also kind of support this increasing expectation of a Fed pivot as being priced by the CME futures, we call it Fed Fund 2. All right. So now let us start with the short-term technical outlook very quickly on the FX market first. So let me touch on the European currency. So let me expand my screen so that you all could focus more on the chart instead. So let's start with the euro dollar chart first. So on the euro dollar, right, yesterday we do have a support level since the start of this week at 1.09. So yesterday the price clearly break down below it due to that softer than expected eurozone core inflation data, and it also broke down below this minor ascending trend line support that is in place since 2nd of November. So with that, right, I will have a neutrality stance for today intraday. That means a sideways range between 1.096 and 1.085. All right, so only a clear break above 1.096, that means the hourly close above 1.096 could potentially reignite that bullish tone to see the next intermediate resistance to come in at 110.40. But however, if we start to see a breakdown below this crucial lower neutrality limit, which is the range support 1.0850. Why is it crucial? Because it's confluence with a graphical element over here, the swing low area of 23rd of November and the congestion zone of congestion area of 17th November, and as well as very closely the 20-day moving average and slightly above the 200-day moving average. So an hourly close below 1.0850 could potentially kickstart this extension of this minor corrective decline towards the next support level at 1.0750, which is the minor swing high area of the former swing high area of 6th of November, turns into a pullback support, and this former swing high area of 12th of and 13th of September, there's also confluence at this 1.0675 level as well. Okay, so that's for the euro dollar. So for the sterling dollar, the price action reacted right at above the 126 figure short-term pivotal support and bounce off it. So with that, we're still maintaining that short-term bullish outlook. So to us, for a potential retest at this week's swing high area. Okay, pardon me, this chart is a bit sticky right now. Okay, at 1.2720. Okay, 1.2720. So above 1.2720 exposes the next intermediate support level at intermediate resistance level at 1.28 figure. But however, if we start to see an hourly close below 126 figure, then this short-term bullish outlook will be invalidated to see the start of a minor corrective decline towards 1.2520 and even 1.2440, which confluence with the 200-day moving average and the upward sloping 20-day moving average. Okay, so that's for the sterling dollar. Then now Asia Pacific currency, let's start with the dollar yen first. So dollar yen first, a bit of wild whipsaw over here. So what we could see over here is the price action cleared above the 14815 level, inched slightly above it, pivotal resistance before inching back down, and right now is attempt to shape another rebound again as well. So with that, right, it seems to me that price action now is rather mixed right now. I'll rather have a neutrality stance between this 1.4890 level over here, between 1.4890 level and yesterday's low of 14685. Okay, so neutral between these two range, that means I expect a kind of range configuration between 14890 and 146.854 today, given the kind of mixed element that we're seeing right now. Okay, so that's for the dollar yen. Now moving on, next will be the Australia dollar. So the Australia dollar actually start to bounce off at the pivotal support level at 65.95. So still using the 65.95 as my short-term pivotal support to maintain that bullish outlook, at least for a retest to yesterday's swing high area of 66.47. Okay, 66.47. So as long as 65.95 short-term pivotal support holds, still potentially maintain that short-term bullish outlook. First resistance to watch will be at 0.6647/6650 to be round out. Then followed by this week high at 66.75. However, if we start to see an hourly close below 65.95, then this short-term bullish outlook will be invalidated to see the start of a corrective pullback, a minor corrective pullback to retest 65.20, 65 figure level, which is also confluence with the upward sloping 20-day moving average. Okay, so now moving on to the major stock indices. So let's start with the Dow Jones Industrial Average first. So yesterday, the Dow Jones Industrial Average actually outperformed against the rest of the major US stock indices. So if you look at the rest of the major US stock indices, the SPX closed 0.4%, the Nasdaq 100 negative 0.25%, and bear in mind that the Nasdaq 100 yesterday has a maximum intraday loss of close to negative 1% before recovering slightly towards the close. I think that's kind of pretty expected. Why? Because the Nasdaq 100 has been the outlier top performer in the entire month of in the whole month of November. So that could actually we call it being expected a bit of what I call profit taking towards the end of this towards the end of the month. All right, then the Dow Jones that I mentioned outperformed positive 1.47%. The Russell 2000 almost on par with the S&P 500 with a gain of 0.3%. So now technical outlook on the US Wall Street 30. Still recall that previously we do have a resistance level at 35,830. So yesterday price already hit that level, and thereafter during the Asia session here, try to actually trade up much higher towards the top of this minor ascending channel resistance at 36,240, and also confluence with a 1.236 Fibo extension from the low of 30th of October. So with that, right, we will still maintain that short-term bullish outlook on this US Wall Street 30, given the fact that there's no bearish divergence that's being seen on the hourly RSI. But recall that the but to highlight the hourly RSI has kind of hit a extreme overbought level. So there's a risk of at least a pullback first before another potential up leg to take shape. So potential pullback level potentially could be at this level over here. Oops. I think my chart seems to be stuck right now. Okay, at this level of 35,760. So 35,760 potentially could be the pullback level. Maximum 35,490 will be our Titan key short-term pivotal support for today. So this level actually corresponds with the minor congestion area of 29th of November to 30th of November, and as well as the lower limit of these minor ascending channels in place since 10th of November low. So as long as this 35,490 short-term pivotal support managed to hold in this potential pullback scenario first, we will still maintain that bullish outlook. Looking, we call it the next intermediate resistance to come in at 36,240. But however, if we start to see an hourly close or breakdown below 35,490, then we will start to see the start of a minor corrective pullback towards 35,140, 34,830, which also corresponds with the upward sloping 20-day moving average. Okay, quickly, the Dow Jones Industrial, the Nasdaq 100. So Nasdaq 100 yesterday managed to bounce right off the 15,765/15,690 short-term pivotal support level that we highlighted since the start of this week. So still maintaining that short-term bullish outlook, but however, price got to clear above 16,160 to actually better reinforce this short-term bullish outlook towards the next intermediate resistance at 16,310. A breakdown the hourly close below 15,690 invalidate this short-term bullish outlook to see the start of a minor corrective pullback towards 15,380 and even potentially 15,175, which correspond with the upward sloping 50-day moving average, and as well very close to this pullback support of this former medium-term descending trend line that has been taken out, that was drawn from the high of 19th of July, that was taken out earlier on the 7th of November. Okay, so that is for the outlook on the Nasdaq 100. Okay, so very quickly, Asia one. Okay, before we go, Asia is German 30. So for German 30, price action going to inch much higher right now, heading towards the next resistance at 16,040. So after above 16,040, potentially sees the upper limit of this channel over here. Slightly lower will be at 16,500 level. Okay, so 16,400, 16,500 will be the intermediate support that I'll be watching for today. Intermediate resistance, pardon me, I'll be watching for today on this German 30 index. Overall, momentum still going to remain strong. No clear bearish divergence that's being formed yesterday after it kind of worked out of its earlier extreme overbought level and managed to actually bounce off above the 50 level mark over here. So indicate to us that momentum is still pretty much positive at this point in time. So with that, I'll be looking for if any potential pullback should potentially store right at this former resistance, which is 6,200, now turns into a pullback near-term support level, but I'll still be using, I don't want to target so tightly at 16,200, so using 16,050 as my key short-term pivotal support level for today to maintain that short-term bullish outlook, with the next intermediate resistance to come in at 16,400, followed by 16,500. Only an hourly close below 16,050 potentially sees the next to kickstart this minor corrective pullback scenario towards the next support level at 15,870, followed by 15,660, which also confluence with the 20-day and the upward sloping 20-day moving average. Okay, so still maintaining that short-term bullish outlook on the German 30 index. Okay, now moving on to the Japan Nikkei 225. So still no change, using 33,100 level as my short-term pivotal support level to maintain this short-term bullish outlook, to at least retest this minor range resistance that is in place since 20th of November. at 33,825. Only a clear break above 33,825. That means an hourly close below it, above it. Pardon me, an hourly close above it. Kind of reinforce the short-term bullish outlook towards the next intermediate resistance at 33,410. Okay, however, a breakdown of the hourly close below 33,100, then we will kickstart another round of minor corrective pullback towards 32,800. Below it, potentially expose 32,200, which is also confluence with this 50-day moving average as well. Okay, so still maintaining that short-term bullish outlook on the Japan 225. So the weakest among the pack will be the Hong Kong 33. So Hong Kong 33 continuing to actually trade sideways below our short-term pivotal support yesterday, pivotal resistance yesterday, 17,160. So still maintaining that bearish outlook below 17,160 to retest 16,800. Below it 16,400 / 16,500. So this is a major support zone over here. However, hourly close above 16,160 then sees a kind of a minor corrective counter trend rebound to retest 17,380 / 17,540, which is the 20-day and the 50-day moving average acting as a resistance, and as well as this former minor, we call it ascending trend line support now turns into a pullback resistance at this zone as well. Okay, so that's for the Hong Kong 33 outlook, still maintaining that short-term bearish bias towards the major support zone of 16,800 / 16,500. Okay, on the Hong Kong 33 index. Okay, so moving on, next will be the commodity. So let's start with gold price. So gold price going to trade sideways yesterday. So yesterday it was actually at the overbought level. So it managed to work out from the overbought level yesterday and managed to stage a bounce on the hourly RSI and now reintegrate back above the 50 level, indicating to us that short-term bullish momentum still remains intact. Okay, I don't want to use yesterday's swing low as my Titan short-term pivotal support level. So still maintaining at that 2018 level as my key short-term pivotal support, looking for the next resistance to come in at 2067 / 2075. So this is a major resistance zone. Why? Because 2075 is the current all-time high level on spot gold, which is XAU / USD. So in short term, we are looking for at least a test at this level first before deciding where gold prices may go next. Okay, however, a breakdown below 2018 potentially sees a start of a minor corrective pullback towards 2006, followed by 1997, which is close to this upward ascending, lower limit of this ascending channel support from the low of 6th of October 2023, and as well confluence with the upward sloping 20-day moving average. All right, so still maintaining that short-term bullish outlook on gold as long as 2018 short-term pivotal support holds. Okay, so now lastly, WTI crude West Texas oil, very messy price action over here. Yesterday it did a kind of a failure breakout above the 200-day moving average at 78.10 before after coming back down again, but managed to help above this intermediate support level at around 75.80 mark. Okay, and right now it's trying to hover around this region level during the Asia session. Okay, so all in all, it's still kind of that bullish reversal, that minor bullish reversal, impending inverted head and shoulders still holds over here as long as 74.30 short-term pivotal support is not surpassed to the downside. So with that, we still maintain that bullish outlook, but the upside trigger level, we kind of shift it upwards higher using yesterday's swing high area at 79.80. We also confluence with the swing high of 14th of November previously as well. Okay, so 79.80 got to break out. That means the hourly close above it to kind of reinforce this kind of bullish momentum, we call it revival, to at least test 81.05 followed by 84.05, which is the 50-day moving average, coming to roughly close to the 50-day moving average as well as the minor swing high of 1st of November and 3rd of November. But however, if you have seen an hourly close below 74.30, then we will see another round of choppy movement to retest the medium-term range support of 72.70 and 72.40. So why this 72.70 and 72.40 is important? Because if you look at the daily chart over here, this is where the previous, we call it 2 months of decline managed to stall right at this 72.70, 72.40 level, which is the congestion area of 2nd of June, 27th of June, and as well as this minor medium-term ascending trend line support level from the low of 20th of March, and also confluence with the 76.4% Fibo retracement area as well in that previous medium-term uptrend phase. All right, linking from the May all the way up, the low of May, all the way up to the end of September, 28th September 2023 high. Okay, so this is a crucial medium-term support level to watch on gold, 7240. Okay, so with that, what's next to look out for today? Today economic data over here, the key data to look out for will be the US ISM manufacturing data. That will be out at 11 p.m. Singapore time, US ISM management data. Then before that, in Eurozone, there are a couple of Eurozone officials speaking at 6 p.m. ECB Edison, 7:30 p.m. ECB INRA, and followed by ECB President Lagarde speech at 7:30 p.m. Singapore time. All right, so that's pretty much sum up the key daily market insights that I share with you for today. And with that, do have a great day ahead and have a great weekend, and we shall speak again on Monday. Thank you.